How's it going, guys? We're gonna do a quick market update. This time, we just gonna start off with the S&P 500, the equities, because I think it's a good pinpoint of what kind of risk sentiment we are currently seeing in the market. So let's go first with this weekly chart. Absolute massive, right? So this is basically what we wished crypto would do, but we didn't do it at all. So what we are seeing, right? You're seeing a sell-off due to the risk for the carry trade, right? And then once that was over, you see a decent or extremely good buyback. We saw that in crypto as well. Then this insane weekly candle nearly close to all-time highs, right? So we're basically just 2% away from all-time highs. So overall, we kind of looking pretty bullish when it comes to S&P 500 and equities. Now, keep in mind that when we're having election year, we actually tend to rally throughout the whole of August, and we tend to go sideways. There aren't any massive sell-offs like we do in just normal bullish years. So in seasonality for equities, we tend to rally basically into October, end of October, where you're having sort of an election dump where we just market and algorithms kind of get confused and we sell off. That's sort of the seasonality we're seeing. And for Bitcoin, we don't have enough data really to support any trading ideas based on election years so far. But that's about it. So on the daily here as well, you can see that we actually shifted from a bearish trend into a bullish trend. Let's see if that holds, but we are at resistance, right? That's something at least to note here. So the point of starting with equities, I just want to point out that we are close to a resistance. Now I think we're going to go higher, but it's something to note that you might get sort of a reaction from these levels, right? Either if you go slightly above or below, but most likely I think we're just going to stop around these levels, move lower, and then sort of continue like this, sort of in a sideways pattern like this, and sort of just be sort of a upwards channel. I think that's the highest probability, and now of course we can do something else as well. So if you look on the 4 hour, we are actually seeing here price coming into this key liquidity level. This is previous gap, very bullish price action, pretty extended, right? So you're having some gaps in terms of just candlestick, right? A void on these candles and the candles below, so we can fill in that before we actually move higher. So that's something to note of. So the point of this is that we are vulnerable for potential for price coming back down. You're seeing the same sort of pattern for Nasdaq, even though it's kind of weaker. Also here on Nasdaq, you can see that we're moving into this level and we're reacting. We actually have a gap higher, so we might go slightly higher before selling off, but nonetheless, we are in a vulnerable place, okay, which we can see sort of a reaction for price. Now, in terms of Bitcoin, I just want to point out a few things here. So we're trading now below the weekly open, right? So there are two insanely small body candles. We have a weekly high and a weekly low, and we're probably just going to trade in between this massive range, right? It's a massive range. It's like how much is that? 30% range, right? So it's going to be kind of difficult to trade that, in my opinion. And the best case scenario would actually to get a candle closer and start trading slightly lower and closing in some of the gap below. I think that would be sort of the best case scenario that we could hope for Bitcoin, because that would set up a lot better trades. Just staying here and just chopping around within this given level is probably the absolute worst, because it doesn't set up any massive trades, right? That's the issue. You want volatility or extend, right? You want to price to either sell off or extend to get some kind of a reaction from the market, so you can sort of get on either on the long side or on the short side and get somewhere, right? So when you're having this job, it just really does a difficult time for people who are trying to trade leverage, and confuses a lot of spot holders and whatnot. Okay, so that's just in simple terms, right? So we can go into some lower time frame here just to see sort of what we are currently seeing. So on a daily time frame here, what we have you can see here that it's just a block of liquidity, which is pretty huge since we have this massive wick, right? And then we're having some of these other levels lower here. So sort of the best case scenario, in my opinion, for everyone would be actually to get a movement in towards this week doesn't, we don't need to rate it, but it would set up something even better, and then sort of get the bottom and let it correspond with mid-September, the FOMC meeting, to do some rate cuts and whatnot. I think that would be sort of a really good idea. So another thought process is here that we might actually just move sideways within this, right? And we're going to have this capped by this weekly high. And eventually, whenever the equities sell off, we're going to see a movement back lower. I think that's sort of the highest probability at the moment in terms of what we're seeing on any charts. If you're going to lower time frame, just discuss some of these trade ideas that we've been watching this past week. So we had a long, right? So we had a long from the bottom section right there. Okay, we took profit around these levels. And then we had a short position, or I didn't get filled, but the idea nonetheless was from these highs back below the weekly open, which happened, right? We had a small long position from these levels, took profit at the weekly open there, and then we tried to get in on a short side right there and target the 55k level. So we were kind of shy of that. We went very close to it, okay, and we saw now a buy signal close to the lows there, okay. So I think we've been doing pretty good with this chart, but you still don't want to have this chart because you're trading too frequently. And you can see how we're having these 1 hour buy signals, even though we don't get a lot of movement, at least, they give a decent signal of where the market is heading short term. As having a strong buy signal up towards the highs, right there at the low, we had a buy signal in towards these kind of levels, right? So we corresponding the low time frame with high time frame, right? So since we're having a sort of a high time frame bearish bias, we're looking to take profit very quickly on some of these trades, especially since we don't have any massive direction in place. So that's what we're currently seeing here for Bitcoin. So what we want to see now is we want this area of price really to cap it, right? You do not want to move higher than these levels. So we're going to see that into New York Open today and probably close over the weekend. I think we can see some chop. So I think a good place to potentially take a short will be within this whole price region, depending on how equities respond. So let's just put this as a blueprint and have a stop above this this high or this weekly. I think this one is the most important at the moment, and then sort of target some of these lower numbers, right? So if we open next week and we hold above the weekly open, we can confidently flip bullish, right? So we can flip bullish if we hold above, let's just use a big round number. I think that's a psychological number as well. So if we hold above 60k level, that kind of going to correspond fairly nicely with a potential bullish case. But considering how the equities look, I think we're going to get some kind of a reaction lower. And we're also getting in towards the end of the month slowly now. And I think as we move higher, the equity is going to become weaker and weaker. And beginning of September is usually the absolute worst months for both Bitcoin and equities. So going aggressive on longs during the worst 2 weeks of the whole year in terms of seasonality just doesn't make sense, right? In my opinion, right? You want to be on the right side. So instead of that, based on these ideas, we want to look for short positions at least the next 3 weeks, and then sort of take a step back and see, where we are towards the middle of September, where we can see, okay, that's probably going to be our big long signal. Either if it's going to be 15th of September or the end of September, somewhere within that time horizon, we're going to have a very good generational low, in my opinion. And if not, guys, welcome back to the next bear market for the next 7 months, where everything goes to absolute zero, right? So let's just hope we are right on this idea. So that's my trading idea moving forward for the next few weeks will be just to have a quick recap. Let's go back to the weekly chart. So the recap, if you can see now, you can't really see it. Give me 1 second. Let's go back here. Let's smooth it out here so it's possible actually to view this trade idea on a weekly chart. Yeah, you can have a slightly better look, right? So we don't need to go that high, right? So you can, point is that you can ladder in within the current price and somewhere within that week. But overall, we do not want to have a close above current weekly high, or especially not the previous weekly high. Any if we for any reason starting to hold above the 60k, right? If you hold above that level, you can see here based on the weekly chart that the weekly candle has to be green, right? So either this weekly candle or the next candle will be a green, beautiful candle if we hold above 60, right? And that means that that's a bullish case. But as long as we hold here within these small body candles, of course we can have more chop, but I think we're going to get some kind of a larger reaction because we're seeing relative weakness to S&P 500. Right? So S&P 500 has been very strong, and we haven't seen relative weakness on Bitcoin. And I think that's going to correspond or drag us down as well when equity is first starting to get sort of a small reaction, right? So the small reaction we are talking about is that if we now, based on the daily here, within this price region or higher, doesn't really matter. But if you're starting to get sort of a reaction, a smaller sell-off doesn't need to be too aggressive, right? It can just be something within this formation, right? Something like that, right? If you're coming back down, something like this before we're moving higher, I think that's going to correspond into a pretty significant sell-off on Bitcoin, right? And then you can probably get some more sideways before we're moving higher. Then you can probably get some kind of a price action like this, right? And then move higher, getting this bottom and move upwards. But the point is that we often tend to get sort of a reaction from price when we're moving into these new highs and after being extremely extended, right? So you can see we're having a lot of large extended price movements. I don't think it will take a lot to spook the market back down, and people most likely going to take profit. If you look at the weekly candle on S&P 500, my bet is some people will take profit. So most likely, in my opinion, we're going to see some kind of a reaction in terms of the candle. And let's see how we close today. Usually people take profit after such a good run. It's basically free money, okay, and we're sitting at resistance. So if that's going to correspond over on Bitcoin, and going to drag the market down. So overall point is we want to see us fill in the lower end of this week. Okay, that will be sort of the best case scenario. I don't really care if you go below, just above, exactly at the level. I don't really care even if you do that. I'm more interested in see that we are actually getting the seasonality, because if we do get the seasonality on point, it actually also reflects that the seasonality might be correct later this year, which we are expecting a decent bull market, right? So if you're getting the seasonality correct now, we're also going to get the seasonality pretty correct towards the end of the year, which is what we really want. So that's it, guys. I think it's nothing really more here to mention. You can use this indicator. I think it's pretty decent for many people. If it's difficult with time sessions, you're getting them boxed in, so you can just follow. For you can see here how we are getting a larger reaction or price movement in New York. So you can see New York is always the largest, right? So prices most likely just retesting different levels in Tokyo and London, okay, and then you can wait for the New York session really to go heavy. So you can see how we're now reacting, right? So we're coming back into the Asia highs, right? So this is just Asia. You can just don't need to use Tokyo, right? So it's just Asia levels. And as you can see how we're coming back into this level now. We're opening the London session. We're having the New York highs. We're having the weekly open. So this just gives us a pinpoint that, if we are going to get a high in, even maybe this is the high, but if you do actually get higher into the New York open or get a reaction, that's sort of your cue to take the position, right? Because most of the time, if you do take a position very early in either Asia or London, you tend to get punished, right? So all of these previous times we actually pump in London session and then sell off, right? All of these sessions, so we just need to be patient and see sort of what kind of price movement we will get around this time period. Okay, that's about it, guys. So let's talk later. Peace out.